Hey everybody, welcome to March 12th, Principal Profit Traders Coaching Call. We are going to get right into it. As you can see, for the last month or so, we've been in this sideways channel and we're trying to come to a resolution to it. A lot of folks think that we're going to have a balanced breakout. I don't think we are. I've already kind of went into a lot of the higher time frame reasons why, but before we just kind of reiterate some of that stuff, let's go over the current market context. Right, we are coming up here essentially testing this almost like a double top here because we were going sideways. We had a breakout attempt, right? But that was a false breakout attempt when it went back into balance, right? And then they tend to test the lows of balance, right? Didn't quite get to the trend line, but close enough. Now bulls are taking it up here. Is it testing right up to the highs? Not really. It's rising in agony. And now for the last couple of days, we've experienced what I'm going to call here volatility contraction, which is a precursor to a big move, right? We've had narrower range days, we've had volatility contraction. The market is rising in agony with a couple of these selling tails. We'll go out on the weekly and we'll look at something, we'll look at a couple of candlestick patterns that might tip the odds. But just looking at this daily context here, we are in a situation where we're not getting a lot of faith in this move up, right? We also have this 50 moving average that's acted as resistance in the past here, up here. So, I mean, we're testing that, right? We kind of tried there. So that's kind of where we're at. If we look at the daily context in 2022, after the 21 top, so if we look at something similar of where we might have been back then, right? When we break that first low, we're coming up. See how we're testing the 50 moving average again? And it's so weird because, like, look at this, guys. It's like, do you see how we're almost testing the highs here, like a double top? We had a false breakout pattern, a failed rally, and then we're kind of retesting it again. That we get a double top that doesn't quite make it near a 50 moving average. Then we get that violent leg down. When we start to come down here, then we could start allocating in. And I just, even though there's probably going to even be another leg down, right? Because this got to what? 17, then it went all the way up to 25, and then it finally got down to 15. If you get anywhere here, you're in the golden zone here. And then we don't need to wait for any kind of golden cross here to substantiate trend, but it's nice that you saw this on the 50 and the 200. I like higher time frame charts, even higher than the daily, like the weekly, biweekly, 5 day, and the monthly to look at these kinds of things. But it's just kind of uncanny how we're trying to, it's so similar. It's like the 50's right there. We didn't quite touch it. We're in a rally, first leg down. Oh, I wanted to look at the CCI back then to see how we're not quite. Now, let's just take a look real quick at what the CCI was doing. I would venture to say it might be very similar. Yeah, you see how as we're coming up to test that to almost a double top of where the false breakout was, the CCI isn't quite getting there. I mean, this time it was even a little bit stronger. We had a hook from extremes. This time we had a really strong hook from extremes. We're not even getting the. It's sort of it's a slower turnover. I still think that out of this volatility contraction, which is a precursor to a trend, based on previous market behavior, the direction there's high odds for direction, and as to what direction, the odds are higher for a down move based on how this has behaved in the past. So I just wanted to compare those two similarities. I could get rid of these boxes where it's like similar in length here and then very much similar in length there. I mean, it's incredible how much you can find beauty patterns, and then we start going volatile sideways, and that's kind of the phase uh, that we're in now. Even time cycle wise, right? We're getting near a volatility contraction where there's going to be some resolution. Here, right? It broke out. Here, the beauty principle is for a break down, right? Just like beauty principle, falling wedge, breakout, rising wedge, bearish pattern, breakdown. and after the double top, of course. So we're in a bearish, right, larger time frame bias since October 4th. So nothing really on this Thursday other than confirming eerily what I just showed you in those similarities on the daily. Now, what kind of similarities could there might be on a different time frame? I mentioned this briefly, oops, in the channel with a special video about these time cycles, but that's not why I kind of wanted to show this one. I wanted to show, you see how last week, just the weekly gives a really nice, I mean, you could see how I'm basically describing similar things on different time frames. I talked about a false breakout on the daily. Here is a gravestone reversal doji pattern. Now you'd like to see this on a rally up in strength on like towards a double top. Like that would be the selling tail up here. You see what I mean? That's but this is a very much a textbook gravestone doji, very small body, strong wick. And it is sort of in a context where we're going, any pop up is going down, any pop up might go down, right? So after that, you'd think that, okay, maybe we would have a down week, but we're trying to test it again. Is that something that, are we going to miss something here? Is this our last chance to get the bottom, right? Like let's calm our fear of missing out here for a minute and let's look at the facts on the chart. Right now, as this is rallying, the previous week was a gravestone doji. As it's trying to rally again this week, we have an inverse zero line reject on the Woody CCI, which is a bearish reversal signal. Let's go back to 2022. After the 21 top, we don't need to go back here too much more. We can, if we go to the index, we can go through Bitcoin's entire history and look at this as we've done many times. But what was happening on that first leg down and after the 2021 top into 2022? Well, we have guess what? A gravestone doji, which is a bearish reversal pattern. It is right coming after that first leg down. And what did the second week do? Well, guess what? It tried to rally. It got very close to where we are right now. So at this point in time, before you knew it went down here red, it looked really green because, where we are right now is Thursday and the week hasn't closed yet. So at this point in time on Thursday, this was a green candle approaching quite almost at the same level as that gravestone doji. And then we had the breakdown, right? It's uncanny, right? That it seems to be playing out. Right? Same thing. We're going up. Is this the rally? It's testing the gravestone doji after that first leg down. What was the CCI doing at that time? Right? Orange over red was confirming, and then it started to look like blue was crossing over, but it was just flatlining, right? It flatlined. Same thing. It kind of blue crossed over here, but it could just flatline. So just remember that even though the blue of orange is more of a bullish thing, that could be a flat line. And we had an inverse and a very strong inverse zero line reject on the CCI. And what was the CCI doing here? Right, not even as strong of an inverse zero line reject. We were just in the red here. So even a more bearish reversal signal in 2026. Huge separation there. Going up a time frame, we'll take a look at the 2-week chart. And here, the CCI doesn't look as bullish, right? It's still flatlining as well. Now, you can take a look at some other angles of this. Right, 1, 2, 3 legs down. We're on the first leg down. The 2-week actually is bearish, right? in a sense, right? It has been crossing over, but red has been over orange. And it's starting to now pinch together. So it's flatlining, nothing great there. Yeah, just giving you different angles of it. I mean, really, nothing happened today that's changed any of the market context. It's still in play that we're due for a further correction down, and that from a time cycle perspective, the market needs to mature more. Because remember, markets don't go down and then up. Typically, they go down, then they go sideways, and then they go up. If you have a principle that all trends start from a trading range or a balance, then you'd have to have these phases happen in this type of order. Rarely would you get the down market and then the up market. That would be the V recovery. That's the lowest odds kind of a pattern to have a climax like that. Because I mean, when did we have a very strong V recovery? Well, during COVID, it's something anomalous, right? Where it's super fast crash, super buyout due to some weird event, and more often than not, they'll go sideways. So don't bet this thing's going to go up, especially how it's behaved in the past here. Um, we're going to look at it from a couple different angles now. We're going to take a look at the daily again. We're going to go to a 3-day chart, and we're going to see how well this looks, right? We have right now in this 3-day chart the 200 rise above the 50. That is a classic death cross. And as you can see, for the entirety of the bull run, we've had this hold until it broke the purple line, right? Same thing here. We broke the purple line first low up, and then we needed this kind of down move. Then we kind of needed this down move. This would take us to around 44,000. But I wouldn't be surprised if it, anywhere here, right, where we've had some buying. People are looking for structure, right? The reason why we're getting some sideways action here is that markets don't just go down, they go down. They move in a series of thrusts and corrections, but we're also in an area where if we drew the volume range profile, you'd see a lot of horizontal transactions around this level. That's really ugly. You know what I'm going to do? Go here, bring that up in this way. Yeah, it's not like, okay. So you can see here, I'll just copy it because I don't want to. I'm going to go to the index with different art on it. That's the double top. I want to get rid of that. Okay. Golden cross. I'm sorry. Death cross, down, down. And if we paste this, I mean, you can see like right here. See this node? It's this node, right? And there's a VPOC, right? That's the indicator. Of course, we're going to have some balancing there because this is the area that buyers and sellers at this span of time agreed on value. So this could start to extend, but based on how it's performed in relation to this death cross after that first breakdown from the moving average, it is going to be a failed rally. I mean, look at the 3-day with this inverse zero line reject here. A very strong one as well there. So the 3-day death cross, and this chart is on the 3 days worked very nice. If you just go back and see how well it's worked, death cross, legs, multiple legs down in Bitcoin's history. This was in the 18 top. Same thing played out, and as well as the 2014, we have a death cross, and it doesn't start to recover. We have more maturity to go, and that's more in terms of the horizontal axis time, and more in terms of the vertical axis, in terms of price, and the price could be 50% lower. And this low could happen based on the averages of all those years that I've showed you relatively soon. We're talking end of March, early April, with the possible double bottom happening in early May. So the lows could happen soon, and then it starts to just go sideways with bottom building, maybe another double bottom in May based on that Bitcoin May time cycle prediction on the weekly, which has worked every single time in Bitcoin's history. And finally, just from a top-down perspective, I want to look at the Gaussian chart. Under education. Also, CCI inverse zero line reject on this time frame. We can go to a 5-day. You can see on the 5-day here, just started to get red, and then it takes time to get red. It takes more time to get red. Even on the weekly on this time frame, it hasn't even turned red yet. It hasn't even turned red yet, and then we got that leg down. So you see, from a top-down perspective, looking at these multiple time frames, seeing the beauty in the repeatable behavior on different time frames, and trying to find time frames that have good signals and not false signals, like good breakouts or breakdowns and not false breakouts and breakdowns, is important. So it hasn't even turned red yet. And then, like, see how this broke out below the Gaussian channel while it was still green? And then when we pop back up exactly how we're popping up now, and then it starts to go down, and then the red takes its time, right? This is where we are. This hasn't even turned red yet on this time frame. And if we go to the 5-day, right, it has turned red, just like when this broke down, it turned red, but then it takes a lot longer to mature. So I'm just basing on these different time frames, these kind of scenarios are how I'm framing the future, because no one knows the future. I'm just basing what I'm going to do based on the principle that previous market behavior influences future market behavior. And any upthrust right now, I mean, this is so, I mean, look at this. It's still in the red, and we have a huge separation between the CCI turbo, I'm sorry, the turbo and the CCI. Very much an inverse reversal zero line reject for the bears here. So, I mean, I'll change my thesis once certain levels of market structure and this idea that I'm showing you or have been showing you, which hasn't failed yet since January 16th, when I said we got to get out around 95 on this pop back up. That was the pop back up into the previous zone, and then that was the last chance to get out if you didn't sell anywhere in the hundreds, 100, 124. So yeah, I mean, that's still intact. Finally, at the highest time frame, we have the Bitcoin monthly here. Same things. Trend up phase, then takes quite a long sideways channel to have potential energy to get the kinetic energy, retest of the highs, double top, breaking key structure here, and now going sideways to rest for another trend out of this at this high volume node here. Be patient. We're almost there. This chart is kind of putting a little clarity on here that we might need to get some type of a time factor. Doesn't have to be this quite as long, but could be shorter. Something like that. Like they don't have to mirror each other. Just think in terms of scenarios, look at these different time frames. And then, of course, this is just how we're going to time the larger time frame bias for our portfolio when we get active again. But then again, if we go on a lower time frame, this is the context for us as day traders as well. We like here, we're not just investors, we're day traders and swing traders. And right, I shorted into this zone. This is a great trade location. Stop up here below here, and if it came up here, stopped out, I would short it again with the stop above here. Right, finance into this, right? Almost stopped out because my stop's at break even, but I don't care. And also, no, even though I said, hey, this is another short setup, the sellers could get active again here, just like I was going to say it again here for this top. I'm not pressured right now to take shorts or any trade with subpar trade location, meaning it's not into my zone here. So I don't have that. If you're fading a zone, you have a stronger edge than if you're just fading the high extreme of day. Also, if we look at a lot of these setups, right, that was okay because you had a Y. I'm talking about this one here, but yeah, I mean, they're not bad. I could have, as a day trader, taken some of these added on, but to me, I'm still half off. I got to stop to break even. I'm betting that this will break to the downside. If it doesn't, I get stopped out and I can reassess. But I'm not going to add on risk in an area where we're in a little bit of an ambiguous in terms of the short term bias here, because we know in principle that right when you go into a trading range and you oscillate around a high volume node and a VPOC, the value point of control, that trends often launch out of them, right? At the same time, we know that the longer this goes, there's going to be some expansion. That's mature balance. I'm going over to different pre-market factors for a trend right now. So we have oscillating around a volume node, we have the mature balance, and we have volatility contraction represented by these trend lines. But then when we finally did break out, it didn't sustain, right? That's why I have these zones here. We had a, right, we tried to break out of the balance ties here, which is this zone, and we hit this. What's this? This is this key swing high and the final kind of breakdown leg, but it's not part of this trading range here. When we came back up into it, we produced a false breakout pattern with good odds now to test the lows of balance. And it got pretty close. These are just principles. They don't have to follow them completely. Didn't have to wait here, right? Didn't have to go all the way down here. Hit here, really strong all the way up, hit this zone again, which was this high, this pullback, a little bit of a problem here, and then it finally broke down. That was our short. Didn't get it. Didn't get it. Now, right, the more time technically that you go sideways above a high volume node, the greater the odds that you can then test the highs of the balance. But we're kind of doing that at near the highs. So for your support and resistance category on your daily call, the resistance category has the edge. So that's why I'm sideways down setups. I faded, the high of the day with good trade location. I mean, here, if you weren't on, you had a wide double top. I almost just gave that as a short setup. And if I was maybe a little bit more confident in these ideas right now, I would then add on to it for a day trade short while still keeping my half on runner from this better trade location area. So what I did is it was a day trade for half off for income, stop to break even, can't lose with some profits. And now I'm swing trading it because I held it yesterday and I'm holding it today. Is it tough? Yeah, I did want to take 25% more off down here a couple of times because it was like 1.6% up, which is not bad. But I'm holding for a bigger, I mean, why can't this balance because of the false breakout pattern and the overall bearish larger time frame thesis that I'm talking about, then break down and at least test this volume node again, or maybe even the lows of balance. So I have to be okay visually with this idea, being wrong. I mean, all it has to do is just pop up here and I'm stopped out, and maybe it goes down again. And maybe I don't have the energy to get in again, even though that's a short in and of itself. But the idea is that with this quiet exit, you have to have an abundance mindset that you have a lot of choices to do something and a lot of freedom to let things run. Like I'm really comfortable now letting a winner run right now because I'm already in profits, and I'm also comfortable with not maybe adding at subpar trade location. And even though they would have worked out overall, not getting in at subpar trade location will make you more money in the long run. So that's how you guys got to think. Even as you can see on a day trading time frame and swing trading time frame, I'm still talking about the long run. It's always got to be about the long game because we are attempting to gain a probability through a large sample size, right? You cannot gain a edge on one particular or two trades or even 10 trades. And you can see this just by the idea of flipping a coin. If you flip a coin with a 50% hit rate, and let's say heads you win $2 and tails you lose $1, which is a very, very profitable strategy. If you had the ability to just flip a coin and not trade, and you knew that 50% of the time you made $2 and 50% of the time you lost $1, you would do that every single trade. The problem is that if you try to have a 50% hit rate in this game, you will feel like a loser. Like Shaq made 1 out of 2 basketball shots as a foul shooter, but everyone knows a 50% foul shooter isn't a good foul shooter. But in the game of trading and in that coin flip, that would be an amazing ability if you could handle it. But going back to the coin flip idea, even with that 50-50 tails heads thing, and it's a real coin, there's no cheating in the coin. If I only flipped it 10 times, I could get unlucky and I could get 8 to 10 tails in a row and just be a loser because the tails was losing $1. But if I take that same coin and I flip it 500 times, I am going to get more closely towards a 50-50% because by inducing the frequency, that's the edge in day trading, the frequency of the sample size, I induce the law of large numbers, which can only happen over a large sample size. So law of large numbers says that if I flip this coin 500 times, then it's going to be more towards 50, 250 heads and 250 tails more often on average. And because I have a good reward to risk ratio, I have that 2 to 1, for example. And that flipping the coin 10 times or 500 times is really shows you the importance of and the dynamics of proper position sizing because in both examples of the 50% win rate and then the 2 to 1 reward to risk, you have a really good winning strategy. But why when the first guy did it 10 times he lost and the second guy didn't is because maybe he over position sized. Now you could survive that unluckiness and get those 10 losers in a row only if you follow that fixed percent risk model where you don't bet more than 1.5 to 2% on your account max per trade. Because you could get unlucky. If you had your stop loss at 3 to 5% and you just got unlucky and you had 10 losers in a row, then you would have a 30 to 50% drawdown. So you have to really, really be selective in your day trading. Know that not trading is trading. You don't have to take a lot of trades or even trade at all. And with the quad exit, I was patient. I didn't have to trade today and I didn't have to trade yesterday, but I'm still active with the runner end to potentially go much lower on this short idea. So I guess that's the theme of the day is everything we teach is holistic and honors the principle of choices. So I hope this top-down approach where we talked about some of these bigger picture concepts for our portfolio, as well as then narrowing it down to the execution time frame for our income producing trades has been helpful. All right, guys, over and out. I'll see you guys tomorrow. Booyah.